ever since the Financial Services Action Plan of '99, for those who remember, and the CMU Action Plan and the second CMU Action Plan, we are always told post-trade is the most important thing. And then when we look at it, we always are reminded of Giovannini and Giovannini barriers. Maybe I pass over to you to hear a little bit what your thinking is in this area.
Some of the barriers we face in post-trade seem to be technical. In reality, they have a very strong legal overtone. And one of the key issues that we've been looking at since Giovannini and in the EPTF is that many of those barriers need us to look at very intrinsic, detailed, embedded legal principles in member states' civil law, and particularly the law of ownership. You see, the law of ownership in member states dictates who owns a security. And if you own a security, what you can do with the security, not only in your own country, but on a cross-border basis.
I do remember very well already in the first Giovannini report, there is a reference to property being something which is so intimate to fundamentals of member states' law that it may have ramifications to touch it. That has been the undercurrent in the discussions that we had since. We have been able to do some improvements here in terms of harmonization for very targeted purposes. And again, we are coming back to the Finality Directive, which was possible to achieve despite the interference with traditional property and insolvency aspects because of the overarching importance of systemic stability.
It is true that the DLT, suppose you do a new DLT environment tomorrow, you will still need to look at local ownership rules for the assets. It will still have all that complexity of the non-harmonized corporate actions, of indeed the legal systems that are not harmonized. All that will need to be replicated in the DLT.
This legal question, solutions to the legal questions is something that we absolutely need. But the obvious comparison always is with the US. And the US is interesting because from a company law perspective, each separate state has its own company law. Yet at the same time, the US has managed to overlay separate state companies' laws with a federal set of federal rules that directly affect capital market participants. So the very interesting question in Europe is, how can we achieve that?
Yes, we need lawyers, but we need lawyers, legal systems that understand how the real market works. And that's coming back to Ilse and CSDR. Some of the people who wrote CSDR had no clue how the repo market worked. And so with my help of my colleagues in the committee, but also with ICMA and the legal framework, we actually have introduced over hundreds of pages of market practice. What should you do this in this case?
Let me pick up on some of the themes that have come out of this. One area is technology.
We're having a very interesting discussion about a pilot project for CSDs, where we actually found out that the industry told us that if we go through with this pilot project, there are some things that might have slipped off our radar screen. So we're looking at that. An example is, did you know that DLT MTFs could actually, under the proposal, for all of its good intentions, actually be exercising CSD tasks, but in a relatively unregulated area? Very, very important.
The traditional differences that we have seen in property and insolvency laws are now also emphasized by the further challenges and uncertainties coming from tokenization. Securities moved in tokenized form, and we have the additional twist here, and I'm not happy about seeing this, that with further discussions on also tokenizing cash, we are bringing what we had in the past as a quite robust framework for the cross-border use of funds and mobilization of funds. This is now being brought in the uncertainty that we witnessed in the securities field.
The DLT gives indeed a possibility for disintermediation, for having trading and post-trading maybe done in the same legal entity. And their CSDR is maybe not totally adequate. So the idea of having a pilot regime is very interesting, but the real novative thing that is proposed in the DLT pilot regime is that an MTF could effectively do post-trading. So it could be an MTF and a CSD at the same time. So questions about what happens to access and interoperability requirements, how you govern possible conflict of interests, all that will need to be addressed somewhat better, I think, in the pilot regime.
I think all the initiatives about pilot regimes, MiCA, alternative assets, all this is really going in the direction of creating a framework to allow us to develop, alternative assets, new types of assets, new types of infrastructure. For me, there's enormous potential. The pilot regime is interesting, but it has this risk. And the risk essentially is the risk of fragmentation.
There already, when MiFID was created, MiFID 1, there was ignorance about post-trade. And so in 2011, I already had discussions with colleagues from Patrick you should look at post-trade as a clear need to be better organized and not put it only in the trading vehicle like Ilse said. You need to look at pre-trade, James said that, trading and then post-trade. But in between, you need machines, you need technology, you need digitalization, you need the cloud. We have it now. Still, there is no category for this specific services.
Of course, at the CSDR review, really, really important. And I wouldn't be surprised if that was put out for public consultation with the member states in the next 2-3 weeks, but certainly before Christmas, with a pretty lengthy I hope a period to reply by the industry. We'll be looking at a wide range of issues, Nick. Authorisation, is it still up to scratch? Cross-border services, internalized settlement, how is that going? And of course, settlement discipline.
So from my perspective, and looking at what is ahead of us, both in the field of clearing and in the field of settlement, it's very welcome that we undertake now a closer review of a number of the key pieces. And from my perspective, I would like to stress in particular that it is very welcome that there is a focus now to look again at the Settlement Finality Directive and the Financial Collateral Directive. These are two fundamental pieces.
What is, I would say, wrong in the current text of the settlement discipline regime is the mandatory buy-in. And possibly what could be done is that you uncouple the timing of both. I think that would already be a start, is that you implement the settlement penalty regimes first, so that there is an incentive for the market basically to increase the settlement efficiency.
Essentially, what we need to develop in Europe is more diverse ecosystems of capital market activity, of capital market participants.
We can do already a lot of better practices for post-trade before we review CSDR, because that's going to take another year. We have 2 global CSDs, all currencies. So why don't we look at cross-currency? Why don't we use our ability in Europe with 2 ICSDs who have actually the whole world in Europe to regulate it in a way that the post-trade is seamless,